So, private money lending sounds simple on the surface, but when you take a closer look, a lot of questions show up real fast. Who are you really lending to? What kind of lender are they? What happens if the deal goes sideways? And how do you protect yourself if you want to do this right away? Today, we're talking about the risks and realities of private money lending, the difference between individual and institutional private lenders, and why LeAnn Lyon chooses to work primarily with institutional lenders. So, LeAnn, let's start there. Why does private money lending make people so nervous?
Well, it makes sense because money, real estate, and relationships can get messy really, really, really fast. People worry about losing money. They worry about getting stuck in a really bad deal or even a sort of bad deal. Or, worst of all, in my opinion, damaging relationships. And that's understandable. A lot of folks also don't know what protection should be in place before they say yes. So the uncertainty is really what makes private money lending feel risky to most people.
Right. So, what do you think the biggest mistake people make when they hear private money lending?
Well, many people think that it's informal, that it's casual, that it's based mostly on trust, and they assume that if they know the person, the deal will be fine. But if you've ever loaned somebody $20 and then felt like they should have paid you back faster, you know that it gets even trickier when it's 20,000 or 200,000. But this is still a real financial transaction that needs real structure, not just a handwritten IOU. Trust matters, but trust is not a substitute for proper documentation.
Right. So, why then is it dangerous to treat private lending like a handshake deal?
Well, really, because if the deal fails, everyone may be exposed. Without a real closing, without title work, and without proper paperwork, there's a lot less protection. And once money is involved, people often remember conversations
Mhm.
very differently. And that's how relationships and businesses get hurt.
Yeah, absolutely. I think everyone can relate to that. So there's two types of private money lenders. I was going to ask you, are there different kinds? But I know there are two kinds. Can you talk about them, please?
Yeah, there really are two kinds. There's individual private lenders and there's institutional private lenders. Individual lenders are pretty much everyday people, well, with a lot of money, using their own money generally. Institutional lenders are professional organizations that lend as a business. And they both fall under the term of private money, but they operate oftentimes very differently.
And who are the institutional private money lenders?
Well, they're not banks, ironically. Everybody thinks, well, institutional private money must be a bank. It's actually not a bank, but they are professional lending organizations. They may include debt funds, security firms, something called family offices that a lot of Americans are completely unaware of, hedge funds, and insurance companies, even. They lend as a business, not as a personal side project, and they usually have very structured systems, underwriting, and formal closing processes.
And how do individual private lenders usually work?
Well, like I said, individual private lenders are often people lending their own funds to an investor. Maybe they're actually withdrawing money from a 401k or some other bank that they have stored money in. And rather than letting it sit there, say in a savings account or something, they say, hey, I'll loan it to you for X percentage and you'll pay me back in 6 months when you sell the house. Well, that's nice. But the term, and so they think, okay, the terms are going to be flexible, they can be even generous, but sometimes they don't get the monthly payments, which the institutional ones will insist on. And they even offer to get paid at the end. And that can work, but it can also be extraordinarily risky if the deal goes wrong.
Absolutely. And so let's talk a little bit about who you work with. Why do you mostly work with institutional private lenders?
Well, for a lot of the reasons I've talked about, because there is more
Mhm.
pressure and less personal risk for me and for my clients. Because institutional lenders do require a real closing, title work, and recorded liens. That process is really to protect them, but in many ways, it also protects the borrowers as well. The process is more professional and it's more predictable, and the process includes everyone and really does look out for the borrowers as well.
Yeah, for sure. So what is the risk of introducing one individual to another individual for money?
That's a really big risk, honestly.
Mm.
And that's where things can get legally and relationally messy. If I connect one person's money to another person's deal and the deal goes bad, and if you've ever watched a reality TV show, it seems like every deal goes a little south.
Yeah.
It's what's behind the wall? And suddenly the expenses go up and maybe the deal falls or the economy goes wonky. And that could be a problem and my business could get pulled into an actual lawsuit. So I've been clearly warned about that risk and personally, I'm not willing to take that chance.
So then what do you do if someone wants you to connect them with an individual private lender?
I really don't do person to person matchmaking for money deals. If somebody wants to be and people do say, "Hey, I want to be an individual private lender. Can you help me? Can you help me find people that will borrow my money?" And that's great, but I will really just tell them, you know what? Make sure you have everything handled. Talk, work with a CPA, work with an attorney, set up your systems just like an institutional lender would. And then maybe there's a conversation we can have. But my role is really to stay in my lane and work with institutional lenders. And that boundary protects me and all of the types of people that I serve.
Right. So when you're looking at a potential loan, what are the main things that you are looking and evaluating?
Well, think of four buckets: person, property, plan, and paperwork. Person means who is the borrower and what their track record looks like. And we've covered this in some of my other episodes as well. Property means what's the condition of the property, where is the location of the property, and ultimately, what is the value of the property now and after it gets repaired. Plan is the budget, the timeline, and most important, the exit strategy. And paperwork is what we're talking about here today, the structure, how the deal is documented and how it is protected.
So then what do you look for in the person who is borrowing the money?
Ultimately, I'd love to see experience with similar deals, honest communication, a willingness to provide documents. We do, and I can find lenders who are willing to work with a brand new real estate investor. So it's not always a thing, but they still want to know, is this person brand new? If they're brand new, are they working with somebody who can help guide them? And, if in that case, I also want to know how they understand the risk and the numbers realistically. That's part of what I do. I help to educate them on the risk and their numbers. In other words, I want to know that they're competent, that they're responsive, and they're serious about the process, really, regardless of their level of experience.
So then what are the red flags in a borrower?
Well, one is overly optimistic. Oh, it's just going to work out. This is wonderful. Or resistance to sharing documents is another one. People who are like, well, I shouldn't have to do that. Pressure to move too fast. In certain situations, we do have to make sure things happen step by step. Private money can move faster than traditional bank loans oftentimes, but if we're not getting the documentation, there's still going to be some slowdowns. And sometimes appraisals and other situations, holidays can slow things down as well. Any attitude that says, trust me, we don't need paperwork is a massive red flag for me.
Right. So what should a lender look for in the property itself?
Well, I want to look at the purchase price compared to the current value, and also, as we talked about, the after repair value. I also want to know the critical condition of the property and whether the rehab budget is realistic, because that's where a lot of people get into trouble. They think, oh, this will be a quick thing, $5,000 in and out. And I don't know, but you can't do a bathroom for $5,000. And then I always look to see whether the location supports the planned exit. Are properties selling at that after repair value price? Are they selling at all right now? And so the property has to support the story as well.
What should be in place before anyone funds a private loan?
Really, the biggest thing is a real closing. Clear loan documents, a recorded lien or mortgage, as we may call it, even though it's private money. The defined terms for repayment, the interest, the timing, all of those pieces turn a risky conversation into a much more professional transaction.
And then, so at this point, why are attorneys and CPAs and title companies so important at this point?
Well, because it's not just something to wing. Attorneys really can help with the documents and the legal structure for the person who wants to set up to be a lender. Title companies make sure that everything is properly recorded so that it protects both of the parties. CPAs, again, more for the lender to help with the tax and financial planning of how this is all going to go and if it makes sense to pull money from a particular fund or account to put into a real estate transaction of some sort. So when real money is involved, professional eyes matter.
Hmm. And then why do institutional lenders ask for FICO scores and sometimes background checks?
Well, because they are professionals managing risk. They want to know who they are dealing with. And really, in March of 2026, the FinCEN laws came into play as well. FinCEN wants to know where the money came from and where the money is going and why it's there. There's much stricter rules that are in play right now to make sure that money is not being laundered through real estate because they've discovered that in the past there has been. And so right
Hmm.
now, if you have an LLC, for instance, we still, it's not enough to say, I have an LLC and we're just going to buy this property. We want to know who the owners of the LLC are. And if the owner of the LLC is an LLC, we'll take it to the next level and the next level and the next level as long as we have to get down to the person who ultimately is involved in the transaction. We need to know who we're dealing with, and those checks and balances are part of the process, not a personal attack. So if somebody refuses to provide that kind of information, again, it's a big red flag, not only for me, but for the lenders that I work with, the institutional lenders. They see it as a sign that they may not be aligned with how the borrower really needs to operate.
What if someone says, I want to be a private lender, but I don't want all that paperwork?
Yeah, then they probably don't really understand the risk. Or if they do, hey, if like I've taught my kids this is too. Never loan anybody money you can't afford to lose.
Mhm.
And in my life, I have loaned people money and to my knowledge, I think I always have been paid back, but I have given it freely, knowing that, hey, if this never comes back, am I okay with that? And that's how it needs to be, even when you're dealing with potentially hundreds of thousands of dollars. So if you're truly okay with that, losing that, then go ahead, skip the paperwork. I didn't say that really. Private lending is a business rule. It's not a casual favor. The paperwork is there to protect both sides. So if somebody wants to do it, they really should do it professionally.
So then if someone wants to become a private lender, what is the first smart step that they should take?
Again, probably talk with a qualified real estate attorney and probably a CPA. Learn how private money lending actually works. Get involved with organizations that exist. Understand the risk before putting money into a deal and don't move forward until the structure is clear. And I strongly encourage to do a full actual closing. Again, not just a handwritten IOU or handshake.
Yeah, for sure. What about this? So what if someone, or should someone do, sorry, if they're interested in lending to someone that they already know?
Now it comes down to not only can you afford to lose the money, but can you be comfortable losing the relationship?
Mhm.
Slow down, get everything documented, use a real closing, and make sure they understand this is a business transaction. And like I've said before, not a casual favor. Familiarity does not replace structure. This is why many people won't lend to friends and family.
Yeah, for sure. So, what is your biggest encouragement to someone who feels called to private lending?
Well, it really can be a meaningful role. In fact, I've written a book talking about how impactful being a lender and a borrower of real estate investments can be. But it really needs the structure, the boundaries, the professional guidance. If you respect the process, you can protect yourself and still participate in real estate in a powerful way. And I mean, there's so many ways that real estate investing can have an impact not only for your own personal financial, but for your family, your community, and however far you want to take it for the causes that are maybe near and dear to your heart.
LeAnn, tell us more about the work that you do.
I do a lot of education. I do um, a lot of education. I have a background as a math teacher. What I love from myself about private money brokering is I get to deal with money. I get to educate people about the process. I get to be a connector of people that have a dream and that have some money in terms of the institutional people. They have money that they want to lend. I'm helping all these people. So, math, teaching, connection, real estate. I'm just super happy doing it all. And even helping other private money brokers. I have a way to help them also to just be better at what they're doing.
Amazing. Thank you so much for this really insightful conversation.
You're welcome. It was really fun to be here.
It was so much fun. And to our audience, thank you so much for tuning in. So, private money lending is not just about putting money into a deal, it's about knowing who you're dealing with, understanding the risk, and making sure the structure protects everyone involved. For LeAnn, this means primarily working with institutional lenders, staying in her lane and making sure the people she serves have real safeguards in place. We will have LeAnn's information in the show notes for you guys to have access to her links and more of her work. And LeAnn, thank you again so much for being here. Until
You're
next
great.
time, take care, everyone.
Thank you, Lisa.